Hatsun Agro right now. I think the stock's seen a sharp correction for the second straight day. And right now it's down about 2%. Let's move on. And they've reported, by the way, their second quarter numbers on Tuesday. While the operating performance was steady, higher tax rates and finance cost has impacted the company's profitability. Let's discuss the quarter gone by with with the managing director of the company, Mr. Chandramogan. Hi, sir. Good afternoon, and thanks a lot for joining us today on BloombergQuint. Revenues, the top line growth was nearly 8%. Profitability this time around has seen a degrowth of about 34%. Take us through the highlights and also tell us the 7% growth on the top line, how much of that is a function of volume growth and price growth?
See, out of 7%, 5% is volume growth only. Actually, the price correction came in the month of September only. Normally, whenever the price correction takes place in the month of September, there will be a small lull. More than that, August, September, we have received 110% extra rainfall, which has led to floods in the market, as well as to the rural areas where we collect milk. So this has affected us in the month of August, September. First quarter, we had 15% growth. We thought that we can maintain it, but probably this August, September, heavy rains have slashed us.
Okay, so clearly the numbers have been impacted by unusual rainfall, which was seen in some regions. But you've been able to maintain your margins at about 10.6, which have come in the quarter gone by. What's the guidance that you can give us with regard to the margins for the entire year?
Be able to maintain this because next quarter, probably the ice cream and curd is not our main season, but the fourth quarter ice cream and curd will pick up strongly. So we can maintain it as this percentage. But the sales is bound to go up. This is I think the 15% growth, whatever we have maintained last year, we will be able to maintain in the second half, in our opinion.
Bottom line seemed to be impacted because of higher finance cost. I think sequentially also there was a marginal uptick that was seen. Could you tell us what's the debt on the books right now? Yeah, go ahead.
Debt is about 1,050 versus our equity. Actually, probably we are going to infuse another 105 crores of the rights issue pending money in the coming month. So those things will just take care of it. The debt-equity ratio will come down. And there is going to be a sharp reduction of interest due to this 105 crores infusion also. Apart from that, the cash inflow is going to increase. We have expanded the capacity very well. Mm-hmm. So we are in a position to do something like 7,000 crores turnover if it is needed. With some minor investment, we can do it in the years to come. That is, year after next.
Okay. Mr. Chandramogan, would the promoters participate in this rights issue?
We have already participated and we have already paid the money.
Okay.
Only the balance money is going to be collected. That's it.
Okay. So can we talk a little bit more about the new plants that are going to be commissioned? I think there's one in Telangana in Q3 of FY21, and then you've got a 4 LLPD milk and milk products plant in Maharashtra that is also expected to be commissioned by February 2020. Could you highlight some details for us of these individual plants?
Actually, we are actually going to have 2.5 lakh liters of milk and 1.5 lakh liters of curd in Maharashtra, Sirsi. This is going to come in the month of February end or March first week of this accounting year. This will start commissioning. Telangana project is likely to commission by the second half of the next year. So Telangana project is going to be 200 crores. This is about 125 crores. Sirsi.
Telangana is also milk and curd, or that's another product?
That is only dedicated to ice cream. No milk and curd.
Okay. Overall, what's the outlay for expansion that you've put out for the year? I mean, this is 200.
This year it will be 450 crores.
450?
This year 450 crores will be the expansion.
Are you adequately funded or would you need some external funding?
No, our depreciation is a major cash inflow for us. We have close to 200 crores depreciation. And this 105 crores is coming in from the rights issue. There is internal accruals. We have got enough cash. There is no issue for us.
Mr. Chandramogan, just one question. I see your tax rate as a percentage of PBT moving up in this quarter. Why has that happened, sir?
Sorry?
The tax as a percentage of the profit before tax rate has gone up, I believe, to 37.2%, if I'm not wrong. Are my numbers correct?
Around 35%.
Because I thought taxes have gone down post the corporate tax
We
cut.
have got the MAT credit. In reality, we are paying a lesser tax.
Okay.
But we are actually providing the tax that are required.
Okay, fair.
Our effective tax rate is we have got a MAT credit of about 38 crores. And till such time that the credit is available, we are enjoying it.
Okay.
Cash outflow is not what the tax is.
Okay, so let me then try and from an accounting perspective of what Hatsun Agro as a company could do in terms of revenue growth and profit growth in light of the plans that you have and in light of the tax cuts that have been announced by the finance minister. What do you think you will end the year with, sir?
No, this year probably we are not going to get into that 25% tax slab because we have got the MAT credit. We have to make use of it. So going forward, probably the growth rate will be maintained at 15% for the second half of the sales. And the PBDAT levels can be maintained. That's it.
Sir, one last question from my side. I mean, with regards to some market concerns which suggest that it is difficult for private dairies to raise EBIT margins beyond 8 to 9%, considering cooperatives operate on wafer-thin margins. In that sense, do you feel that your margins also could be a bit more curtailed to match those of cooperatives?
No, in fact, probably our margins have improved over the period, and probably it can improve further. See, we are not only into milk, we are also into ice cream, we are also into curd. We are also making frozen pizza. So, comparatively, we have got a basket of products. And again, even on milk, we have got regional factories, and we also command a premium over the cooperatives. We are not charging the same price. As most of the people say, it's not commodity. When a lady housewife buys the milk, she is looking at a brand, and probably for a brand, we are in a position to command a premium.
Are you seeing a bigger shift towards organized players like yourself?
I don't see any major problem of compression of margin. See, the margin compression happens because the overall kitty, the milk powder business and other things have got a lesser margin. Otherwise, probably we could have got an even better margin, I can say.